Boom. We are live, ladies and gentlemen. Thank you for joining us today. It's T with the Arcane Bear. It's been almost a week since we hung out last time. I hope you guys have enjoyed your weekend and the market so far. We're going to keep it pretty simple today, although at the end of today's episode, if you're on the live stream, we're going to be going over as many ideas as I possibly can. We just want to kind of get a general market sentiment from a bunch of the other stuff we normally look at, which means it would also be audience participation time at the end. But for the beginning of this episode, what I'm going to do is share something a little bit more specific with you. Here is Bitcoin, a colorful chart. Each one of the white lines that you can see dissecting these, and the one that I'm going to add, represents when the RSI, or the Relative Strength Index, was its lowest. Now, RSI doesn't necessarily mean the bottom by any means, as you can see near the left here where my mouse is, that in 2017 and to 2018, when the bull market ended, we actually saw a pretty consistent drive down into the RSI, to this really, really low RSI when we dropped to around $3,500. Now, as you can see most recently here, and we'll actually kind of just hone in on this area here. This is probably one of the more interesting aspects about what we're going to be going over. And I think it's important for a few reasons. Now, primarily, again, the RSI is at a low and moving higher. Now, where we've reached today was kind of fun. If you'd actually the last time I made a video, this nice white line here that was on the downtrend, we suspected we would break through that. We broke through that very strongly. We've actually started to hit a bunch of resistance. So we're going to take a look at a few of our kind of stacked indicators. Now, we don't always, actually most of the time we try to keep as much noise off of the screen as possible for a bunch of reasons, but generally people are very emotional, and the more things you can give them to be emotional about, they are. Bright colors will help do that. But this band that I have, well, there's actually a few different variations of the band. So we have a few things going on. So we have a stacked exponential moving average, which are, actually, let's go through these one at a time so it's a little cleaner. Okay, we'll get rid of this one. We'll get rid of this one. And we'll get rid of this one. Okay. This is the bear claw. If you are in TradingView, you can find this. It's a free indicator that we give away. It's a stacked exponential moving average and two simple moving averages represented by the blue and the green line here. The exponential moving averages, which is where we're about to hit up to at the moment, is one of the reasons why we said we're going to hit $46,000 this week. We said that approximately January 29th. We nailed that. Not we nailed that. The market did a great job at bringing us where it looked like there was some resistance. Now, we're in a pretty important area. Now, for a few reasons. I want to share something that we had gone over in our previous videos, which is a comparison of the S&P 500 to Bitcoin. And a lot of people, I think, are probably going to recognize this sooner or later. I believe that this was the bottom of a reaccumulation channel. And it was one of the things we had mentioned when we were back here in around April, that there was a high potentiality that you would actually see a big reaccumulation channel as part of the wave 4 before the next wave upcycle. Now, the fun part here is that the S&P 500 took around 20 years to do this. Now, there's a few really interesting things that have taken place here. Number one, in our private group, we went over this morning. And for those of you that don't know, the disease of the early stage investor comes from over-emotional trading and lack of education. And the one way to cure that is by joining a group of individuals who focus on solving those problems. So if you go to arcanebear.com/private, you could sign up for our private group. We were going over this morning, but I wanted to share this aspect here, which is from Bitcoin's low around 11,000, which is the not low of this market cycle, but of the start of the bull market. You have around a 460% gain. Now, what's fun here, from the S&P 500 from around 1994 to the top of 2001, you saw around a 300% gain. Now, Bitcoin's moves are much faster. There is a time delay here. Now, it's not going to take 20 years for the Bitcoin market cycle to complete. You have a significantly reduced supply compared to something like the S&P 500. But what I believe we're witnessing here is pretty much an exact replica, or I guess one of the easier ways to call it would be a fractal relationship between these two. So these are both horizontal trading ranges, and it's something that we've looked at before. This is a reaccumulation schematic too. This is, you can also find as part of our private group data. Now, again, what I suspect we're witnessing here is a reaccumulation schematic, that after the bull market, what we're seeing is a secondary accumulation cycle before the finality of this bull market. And if you compare what happened to the S&P 500 after that completed, which we'll do here, you can see the continuation of this market cycle and how almost irrelevant that this particular area became for the S&P 500. Now, again, the time frames on these are dramatically different, and they're not really that important. It's one of the interesting concepts. If you do your research and you dive into something like scale invariance, the time frame is effectively irrelevant, and that's important to recognize. That scale invariance is a really unique function in mathematics and physics. If any of you guys like math or science like I do, you'll have a lot of fun kind of falling down that rabbit hole. But because of this, I suspect what we're seeing is a larger reaccumulation channel, and there are a few reasons for that. So there could be a very quick return to the $60,000, $64,000 area in the coming weeks. Now, a lot of people are worried that this is a fake out and this is just a secondary downward potential trend, and it just doesn't make any sense to me. And there's a reason why it doesn't make any sense to me, and we're going to go back over here and take a look at that. So people think that markets are driven by price, and a price is a tertiary aspect of supply and demand characteristics of any market. Effectively, what we're witnessing when we're watching market cycles is the difference between the supply and the amount of demand. Now, we've been seeing a consistent decrease in supply. Here we are now. The white line represents Bitcoin's price, and the orange line represents the amount of Bitcoin on open exchanges. As you can see here, the previous time we had this drop down to the $30,000 area, there was a massive, absolute massive amount of supply that came into the market. We went from 13% to 14.5%, as a whole, like 2% of the Bitcoin supply that came onto the open exchanges at any given moment. And since then, we've been falling in supply quite dramatically, and the price has stayed quite stagnant. This, to me, actually represents a really, really bullish indicator. This is actually what we would call bullish divergence between the supply and demand. The demand is consistent. The supply has been decreasing, and the price has stayed relatively calm. This, to me, signals that what you're witnessing is really big players who know how to accumulate without disturbing the overall market price. They want as many Bitcoin for as cheap as possible, and that's going to come from miners and weak hands. And if you're new to the market and you don't want to know what weak hands is and you haven't experienced it, it's usually you'll be sitting on an asset, it'll be down just a little bit from where you bought in, you'll wait and you'll wait, and just before or just after you sell, you will end up, there you guys go. You can see the bottom of the supply decreasing there. Let's actually make that bigger. Bam, like that. So usually what we end up watching happen is that people will start to leave their positions now because the market, first off, is older than you. So its goal is to take advantage of the things that you don't control very well. And all humans, mostly all humans, are really bad at controlling their emotions. They like to think of themselves as extremely logical beings, but they are emotionally hyperactive, especially when it comes to money. And especially for the people that don't have a lot of it, they're even more emotional about the money. So a 20 or 30% decrease can be a bell ringer for them. And I think what's important here to understand is that when we have these, let's say, divergent characteristics, where we have a falling supply and a price that's stayed relatively stable, what this represents is strong hands accumulating. Right? That's I think fairly obvious. One of the things I'll always tip my hat off to Michael Saylor for is really giving a great kind of overview and expression of what you should be doing, which is accumulating on a month-over-month basis. Because regardless of where you are, if you focus on an accumulation strategy, the market cycle can't wash you out. And this does a bunch of great things by balancing risk and reward and consistency. Being able to show up on a month-over-month basis to make investments is going to make your investment strategy a lot easier to manage. Too many people show up at the top of the market Like when Bitcoin was at, let's say, $60,000, they buy the top of the market and then they get scared and confused and usually sell somewhere near the bottom of a market cycle, usually about a week before the market turns around as well. Pretty characteristic for most people. The last time Bitcoin was down at $3,000, it was only like a month later until it was at $13,000, pretty much back up to its all-time high of 2017. So focusing on a logical strategy that gets rid of your emotion is one of the most important aspects of a good investment thesis. So the reason I wanted to go over let's actually get rid of all of our drawings here for now. Remove drawings, bang, just like that. The reason I wanted to go over our exponential moving averages is because we've hit the top line here, and there's a bunch of factors right now that are tight around this area. First off, we have our volume profile, which is the area to the right here, the red and blue. This is the amount of buying and selling within this visible range that has taken place throughout the entirety of this market. Below that is this nice big chunk, and as you can see, this is actually created what I believe to be our current support line. Now, this is also highlighted by the point of control, which is this red line here. The other two simple moving averages are the 200 and 314 on the day currently. This will obviously always change as we change time frames. So just like exponentials or simple moving averages, when we change the time frame that we're viewing each of these charts on, it's going to give us a different sentiment based off that time frame. So I believe we've hit the bottom. We're hitting some areas of resistance, so it's likely that we will see a little bit of a retrace, probably test around $39,000, and then I think we're going to continue upwards of $50,000 to $60,000. So being patient and understanding the long-term aspects of a market cycle is extremely important. One of the fun things about Michael Saylor is MicroStrategies is pretty much every month, on the month when they have extra revenue, they're accumulating more Bitcoin, understanding that if you are generating revenue as a business and you know that the US dollar is inherently a liability because these folks can print it at whatever willy-nilly bullshit that they would like to, why would you want to be dealing with that? And Bitcoin inherently solves these things, so what a better technology to be investing in. Now, the other important factor here is to understand that when you remove the emotion and you focus on a logical month-over-month strategy, your ability to succeed increases almost exponentially. These are very volatile assets. Bitcoin's growth since I've been watching is in the tens of thousands of percent. Right, pretty close to 100,000%, at least since I've been watching. Now, I wasn't here at the earliest. I wasn't here at $1 Bitcoin by any means. But nonetheless, this exponential growth, or asymmetric growth, as I like to call it, or probably as it's more better termed, is hard to hold on for the ride for. And the up and down of the price is designed to get rid of you, the average investor. Well, players like Michael Saylor, who have the lack of emotion and the conviction to play out the long game, end up being successful. Too many times I've seen people in a great position on a really interesting fundamental trade, and they exit right before the market moves to some degree. I bet you could go around and you could do a spot check. Most retail investors probably sold somewhere around here, right near the bottom. Now, again, it depends, right? I'm a big proponent of basically not taking profits effectively. Now, it's always feels like a bit of a contradictory idea, but the reason is your portfolio shouldn't be used for revenue generation effectively. A portfolio is a little bit of it's almost like a house. I don't buy a house. Some people buy houses to flip them, but this doesn't sound like a good idea to me either. It just sounds like a waste of time effectively, but that unimportant. The reason why you want a portfolio is because over time, if we understand that the dollars are being inflated and the assets prices are going to increase, and that pretty much regardless of government or culture or religion, that this thing has happened like over and over and over again. Actually, more and more I've started to recognize that the human species keeps repeating the same kind of silly mistakes. So because we kind of keep repeating these silly mistakes, let's bet on that. Let's bet on the fact that humans are going to continue to kind of do the same stupid shit, which is allow their governments to print and inflate, destroy the currencies while all other assets inflate. And this is one of the reasons why we thought the S&P 500 versus Bitcoin is such an interesting comparison. The real reason the S&P 500 has gone up isn't because there's been more productive value in the economy. No, as a matter of fact, that's actually not the case. We've gone over this many times before. When you go to compare, and you compare the money 2 supply, or the M2 supply from the Federal Reserve, you see a direct correlation between the growth of the monetary supply and the growth of the market itself. So here, the orange line represents the printing, basically, by the Federal Reserve, and the white line is the growth of the S&P 500. Now, I don't think it takes a kindergarten would probably be able to see this and say, hey, look, there is a correlation. Is there causation? And it's a great question, because they don't always equal each other. Just because they're printing more money, does that mean that the assets are going to go up? Well, yes. And this is one of the reasons why we did see a big drop on the S&P 500 more recently, is because the Federal Reserve came out and said, hey, we own $8 trillion worth of assets on our balance sheets and mortgage-backed securities and bonds and corporate bonds and crap like this. And hey, if we ever started to liquidate the $8 trillion in assets that we have, the entire market floor would drop out, because the only reason the market is as high as it is yes, because they've been printing dollars. Now, there's a few different ways to look at this. There's the debt to GDP ratio, and effectively for every few dollars we print, we are producing like 30 cents worth of productive value. So we've gone down basically a rabbit hole, and it's not the first time. We've seen governments around the world do this frequently. It's not the first, and it won't be the last time that people try to make these mistakes with currency. Now, probably a good place to start would be to understand that currency and money are effectively totally different things. A money is a store of value, and a currency is designed to be an economic vehicle for a very short period of time, almost like a hot potato. You don't want to hold on to it too long either, because, as we know, the currencies are a liability. So this nice big spike drop down here that we saw in March of 2020 was the start of the bull market that we've been in based off this money printing. So we're really relying on the Federal Reserve here to keep doing the same dumb shit that they've done, right? That's if the Federal Reserve were to stop printing and liquidate all of their assets, you would see a rebalancing of pretty much everything, and that would have been healthy. As a matter of fact, there are a lot of economists, especially those who study the Mises Institute, an interesting group, because inevitably you have this disconnect between those who are in control of the currency supply and the people that then have to work for it, right? Remember the government at the beginning of the pandemic just like, hey, we're just going to give money to random people. Probably a lot of them are our friends because, whatever. And this is what happened in 2008 as well. They bailed out companies that were failures. Now, I've started a bunch of companies. Some of them have failed. And I never once was able to get like some buyout from the government who's like, hey, we really don't give a shit that your company sucks. We're just going to buy it out anyways. And you don't have to do anything better. You don't have to fix anything in your internal business model, and you can still screw people over. So the U.S. government and actually governments around the world have been doing the same thing. It's called crony capitalism, which is where the governments are effectively in charge of the money supply, and they can give it out to whoever they please. So this is effectively why Bitcoin has always been and will continue to be such an important core aspect of our fundamental thesis. It is an answer to the monetary problem that we've been having, which is how do you get it out of the government's hands and into the people's. Now, what's money? What's currency? These are great questions. And generally, a money or currency could be anything that we choose to accept. I mean, if I happen to be that into dirty socks, like, hey, Iris, you got some dirty socks, and I'm like a big fan of feet or something, then maybe socks would make a great way to pay me. But I'm not a huge fan of feet, and nor do I like dirty socks. But that being said, if I wanted to accept it, I could. And that could be the money for any particular peer-to-peer trade that I might like. One of the most unique aspects here is that this is an offering. This is an offering for people to choose their own money. This is why I was initially bullish on Bitcoin, and when I am still bullish on Bitcoin. It is very difficult to find free choice anything in today's market, and having a free choice money is a step in the right direction. And this whole entire sector really brings that to light. So one of the things we want to do now is actually just go through a bunch of different market ideas. So we're gonna go through and do something we haven't done in a while, and we're just gonna look at like all of our charts. And a lot of the ones I want to go over are the ones that we've had drawn for multiple years since the beginning of this bull market. So let's go back to Bitcoin on our multi-year chart that we've been watching. Is it this one? Yes, it's this one. And get rid of, boom. Okay, so if you've been following us since the bull market started, that's for me, March 2020, when the pandemic began. That was the effective start of the bull market because it was the previous market cycle low. Blood in the streets is another way to say it. Buy when there's blood in the streets, or literally people falling over from an unknown disease. That's like another really good indicator that you should probably be buying assets. And just for the future as well, ladies and gentlemen, if you see a pandemic or a war, that's a great place to be acquiring assets effectively. It's kind of counterintuitive, but it makes the most sense because this is when people are the least capable of making logical decisions, is when they are trapped in states of fear. So let's open this up here. Okay. Whoa, what's happened? Sometimes TradingView is not great. Okay, so it's just going to swingle dangle with this line. I don't even know how that happened. And it won't let me undo it either. Okay. Okay. Let's see here. TradingView. You're being super annoying. Let's get rid of this too. Wow, that's a pain in the ass. Okay, I'm going to use this white line to kind of point my way around then. Okay, so the spring, the spring here down at the bottom indicated by this random white line I seem to be using. This was where we were hyper bullish. This is the most exciting time to be getting into the market effectively at the beginning of the market cycle. Now, where we are now, the risk to reward relationship is basically even. This is also why we suggest a month-over-month strategy. It's going to be the easiest way to remove any emotion that you have from your investment strategy. But because of this, I believe we're probably at a bottom. We're actually at our second regression line. And if you go back and do the same thing in the previous market cycle, the second and third regression lines were the lowest of the market could go. So again, that means we could see like a low of around $24,000 to $19,000 for Bitcoin, which would not be unheard of, but it's very unlikely that that would last very long. The reason why it's unlikely that that would last very long is because of the amount of buying pressure that we've seen in this market since this all started. So we'll do the same thing with Ethereum. Ethereum actually is even, boom, yeah, right off those second regression lines. Now, Ethereum's lower regression line is way back down here at around $700. But since then, Ethereum has really changed a lot of its market dynamics. It's now more of a deflationary asset. But ultimately, you can see why technical analysis, especially in the beginning of the bull market, is so freaking powerful, because it gives you a huge amount of data and a lot of early leading indicators that you want to be bullish on an asset instead of lagging. Now, a lot of the moving average indicators are lagging indicators, and I don't suggest you really use them as a kind of a scope of judgment for where the market is going to go. They can show you generally where the market has gone as a good lagging indicator, but the aspects that we are watching down here, like again, you can go back into August, or basically May through August of Ethereum here. What is wrong with TradingView today? It is absolute trash right now. Come on, TradingView. What the is going on? Okay, I don't know what's going on with TradingView here right now, ladies and gentlemen. This is a little annoying. It's not making it easy for me. Let's just close this. Maybe if we reopen it, it'll give us a better chance. It's not even closing that. Okay, so we're having some technical difficulties here with TradingView, apparently. Yeah, close that page, please. Close that page. Yeah, okay, there we go. It's just going to close all my tabs now. Okay, hopefully it'll... wow, I've never seen TradingView this bad before. That's astonishing. Well, let's actually take this time to go over some thoughts and questions while I'm going to restart TradingView here in the background. At least we got to go over Bitcoin there before TradingView fell on its face. By the way, TradingView, get your together. It doesn't look good for you on screen. Okay, let's take a look here. I'm going to reopen TradingView in the background, ladies and gentlemen. We'll go through a few of your guys' thoughts in the meantime. Great stuff. Can you show the proof of point of control on Ethereum? Yeah, we'll go over Ethereum here as soon as I can get TradingView back up. I apologize about that. It's being a little finicky. Okay, it looks like we're back online with are we back online with TradingView now? It looks like it. Okay. Okay, here we go. This is what we were trying to get at here. Okay, so here's Ethereum. What I want to do is focus on where we were back in March, April, May of 2020. So this is one of the reasons why this is most exciting. Now, I haven't touched this drawing since we made it. You can go back and watch all of our videos. But this is the trading range where we started to scream bull market. And this area around here for $300 to $400 Ethereum is where we were super excited because it was clear that we were going to go quite a bit higher. My initial guess was around 8 grand. I still think we'll probably see 8 grand. As probably the finale of the bull market. But again, these Wyckoff trading ranges, you're looking for much longer time frames than we normally get. And finding the bottom, maybe it's just because I like bottoms, is a hell of a lot easier than finding tops. I don't know. Could make some jokes out of this, I'm sure. But we are very, very high up in the market cycle right now compared to where we were when we started screaming bull market. And because of this, many of you guys don't show up until Ethereum is way up here at like $2,000 to $4,000. And it's also why most people do really poorly in a market cycle, is because they don't show up until the price is really high and they don't have a way to recognize the value when the price is low. Technical analysis is much more reliable when you have been dealing with a bottom for, we were in Ethereum's bottom between $80 to $400 for almost 2 years. It's a load easier to get that right than it is to get the top right of where we are now. And again, what I actually suspect we're seeing is a secondary accumulation channel, that we're witnessing something kind of similar to Bitcoin, which is that this new area here is turning into our accumulation pattern. Now, we could be wrong. Ethereum is still an early stage asset, right? It's got a lot of power behind it, but effectively anything outside of Bitcoin, in my opinion, is akin to venture capital, which means there's a high probability of failure, which means you should always be limiting your downside. And again, the best way is a month over month consistent strategy. And if you repeat that strategy every month that you show up, maybe you find something new, you learn something new, you hear something new, and this will give you more or less confidence and conviction based off that investment thesis, and you can continue to put in whatever you're willing to lose. Now, the reason we want to go and start with what are you willing to lose is because then that is what our downside risk tolerance is, right? Or at least sit on for some extended period of time. Now, I don't think making an investment in Bitcoin is going to end up equaling a loss unless you do something silly or you end up getting it hacked or by doing something incorrect with your seed phrases effectively. So be careful, make sure your security is super tight. But the super exciting times of getting into Ethereum, we're at $300. And if you want to be there, well, first off, make sure you follow our channel, because we're one of the only, there are a bunch of YouTube channels now somehow more popular than we are, yet we're not here for any of this. It's baffling to me, but I guess hype and emotion is popular instead of actually being right, which seems to be less popular these days. Being correct doesn't seem to be super popular nowadays. Or the truth, maybe, I guess, isn't as popular as it used to be. We're hoping for like a revival of truth, ladies and gentlemen. Let me just go off on an entire rant on that. But let's take a look at a few other areas of the market, especially because we like venture capital. So, huge fan of Avalanche, and Avalanche's recovery the last little while has been fantastic. So our initial entries in Avalanche were around a few bucks, and now we're up at 90. It's all over 100x in less than a year with Avalanche too. So it's very exciting. But what we want to do right now is get an assessment of where the market is as a whole. So let's kind of take a look at this here. So this actually looks to me like a bull flag. Now, again, these are not super strong technical indicators as comparison with where we were when we had this beautiful trading range take place back here between June and July. When we were down here for at $14 for Avalanche, you can go back, look at my videos. this was hugely valuable place to be accumulating Avalanche at $14 basically. But this was a very beautiful trading range. It was a perfect falling wedge effectively, and it broke out fantastically. And again, here, I think that, again, what we're looking for is sentiment indicators. I believe that what we're witnessing is a bull flag, and it's also a strong indicator that the rest of the market cycle is not over, not just in Bitcoin, but in the rest of the market. So the fact that we're seeing what I believe to be a bull flag in Avalanche is also strong. Now, a lot of people, I don't know why people get this wrong, but they're like, oh, look, Solana's down at $116. It's like, okay, well, if you've actually been watching our videos, some of our first entries in Solana were also around $3. So being patient is hugely important. Most people, again, don't show up into Solana until Solana's at $90 or $140. They're like, oh my God, Solana's amazing, I gotta buy it all. And then they get upset when they buy Solana at the top and wonder why they're down 63%. Okay, well, again, the best thing to do here is, well, I think you found a good asset in Solana. I think you found a good asset in within things like Avalanche as well. And what do we see here? We actually see another really strong downwards line. That sounds super smart here right now, don't I? Check out this downward line. Let me do this again here. I want to make more sense, I promise. Okay, let's go back to the candlesticks as well. It'll make it a little clearer. Yeah, there we go. So this is a nice falling channel here. And bang, bang, bang. We are not at the top of this yet, so I suspect we're going to probably run up to around $140 with Solana. Now, Solana had a lot of hype come into it. There's a lot of big players invested in Solana as well. And this to me actually looks like an accumulation channel. So would have to actually probably do a lot of backstopping. I'm not sure how many of you are up to date with your Wyckoff studies, but if you are up to date with your Wyckoff studies, these falling channels often become accumulation channels as well. So I suspect we're probably seeing a pretty close to a bottom with Solana. But also remember, not that long ago, Solana was only at like $3. Okay, so there's a huge difference from where we started looking at these things to where we are today, and also the importance of understanding that macro picture, because just a consistent investment on a month-over-month strategy, you end up with a perfectly rounded price, and you can ignore all the emotion, giving you a logical plan that you can repeat. And that's the most important, because again, what the markets have learned how to do is take advantage of the thing that you are least skilled at managing, which is your emotions. And it's not just you, it's humans in general. We are emotionally flagrant things. So because of that, the markets have learned how to take advantage of that emotionality and the lack of logical thinking, especially when money is involved. Now, there are some big gaps all the way back down to $45 that we could potentially want to try to fill with Solana. So it depends on how much of that open supply is in the market. And this is really where understanding supply and demand characteristics on the long-term macro perspective is important. Because let's say you made an investment in Solana today and you're a month ago, 2 months ago, and at $200, and you haven't bought any more. But if you bought more, you've now rounded your price back down to like $130. So the reason why a month-over-month strategy works so well is because it's getting rid of your poor emotional stability in a market cycle, which is designed to make you do things that are emotional and out of the market sync. So it's probably the most important thing to understand is that the markets take advantage of your emotions. And once you really get a handle, I think, on what that means, understanding why you want to be consistent instead of just make one, like, oh, should I invest $100,000 in Solana today? Is that like the best thing to do? It's like, no, first off, there's way too many emotional indicators here. It's like, oh my gosh, should I do it today? It's like, you're just making stupid kid mistakes. Be consistent. Outline a strategy that you can execute for the next 5 years and you'll make yourself millions of dollars. It's pretty simple, really. Now, the only reason I'm saying this is because I've made every fucking mistake in the book to try to tell you now, hey, here's what you should do. Ignore the price. You're like, well, Tio, I'm here so I can make more money, so the price has to go up. It's like, yeah, but then you're going to play right into the market's hands of your emotionality, thinking that you can beat something that's technically more logically sound than you are. Now, You could get the asset wrong. Maybe we were wrong that Solana was going to be a great asset choice. Maybe we were wrong that Avalanche was going to be a great asset choice. We weren't, which is fantastic for us, but we could have been. And that could have been, again, is limited by the month-over-month downside, which means that every month as you continue to increase or decrease your conviction, instead of selling your assets, you just don't add to them, right? If all of a sudden I'm like, you know what, Avalanche is shit, I'm just not going to add to it. Well, that's great, because whatever I have in there now, I was okay with losing in the first place. And maybe the market actually validates me a few months, few years later. It's one of the things that's almost always happened is the market validates you later. And patience is probably your strongest guiding light and indicator. So we're just going to roll through really quickly and take a look at the rest of the market. Rook pretty much hitting multiple bottoms down here. And the volatility too is quite interesting. Here's Woo Trade. Again, look at this massive swipe of volatility from February 2021 to where we are now, a 2,600% gain. Yet the box itself, like from the bottom of the trading range effectively to the top of the trading range, is a 500% swing. You have a 500% swing from the top to the bottom. And this happened actually a few times. Like here's one 300% swing and then a 50% loss. Another big swing, 50% loss. Another big swing, 50% loss. Like, this is why some people like day trading, is because there's a lot of volatility to take advantage of. But often the best thing to do is just, again, to buy month over month of an asset that you like. So you get this nice, really mid-range price. And we come back again. I don't know where Woo is going to be, but what if Woo is at $800, right? 800 times higher than where we are now. That's a pretty ridiculous. It's not a prediction. Don't take my any word for that. I'm just making shit up right now. But as an example, that's what asymmetric growth looks like, an 800x gain. So if that were the case, this whole market up and down cycle is really designed to do nothing but get you out of the market, right? So yes, you could make a lot of money on day trading. Most people don't. If you go to Forbes top list, it's not full of a bunch of fucking day traders. I'm swearing a lot today. It's full of equity. It's full of private equity, venture capitalists, and entrepreneurs. That's really what Forbes top list is generally full of. Entrepreneurs, private equity, and venture capitalists. There's one trader at the top of the list there, and that's Jim Simmons. And I've learned to recognize that very few people can do that. Now, it's possible. Like I said, there's a lot of volatility in these markets and you can take advantage of it. But again, this is really designed to get rid of you. If you're watching anyone who's suggesting you use leverage, they're full of shit, and you're following people that do not have your best interests in mind. So just right out the gate, if you're new, don't touch leverage unless you want to just figure out what it is, but you're always pretty much going to lose in the long term. This is a market that's already able to produce 100x, 200x gains. You don't need to be fucking around with leverage and maybe lose your investment. We're gonna roll through a bunch of assets today. Again, here, look at FTT. Okay, so here we were back in November, and then look at this range from the bottom of the market to the top here, 200%. So you have a 200% range bound trade effectively. This is very hard for most people to hold on to, and that's the point. This is designed to get rid of average investors. All of this is designed to get rid of you. So don't let it. Understand why, how, and what can be done to better navigate this world, this arena, and your chances of success increase dramatically. So 1 inch here, this was great. We use 1 inch as an example of a day trade. It worked out really well. We jumped out around 550. So caught almost the top on that thing. We did see a wick upwards of $8, and then it's right back down to the bottom of the range. So this is, again, tails that don't lose much. Start with making sure you limit your downside based off your initial investment. That way, no matter what happens, no matter where you stay, you're well positioned based off what you were willing to be willing to sit on, at least. Let's not say lose, but at least willing to sit on. Mercurial all the way down at a bottom as well. So what I'm doing here is actually we're finding that there's probably a fair amount of bottoms that have been putting into place. Even with FTM here, we see another 200% range at the moment. These are huge range trades, by the way. This to me represents, well, first off, big players taking huge profits, and then a lot of retail, effectively. It's a lot of retail probably getting washed out in the market. So again, I apologize, ladies and gentlemen. Just try to keep it simple. Don't use leverage. It's much easier to. You want to make it as easy on yourself to be successful as possible. And I've made as many mistakes as one could possibly make in this market. And what I'm sharing with you, my thesis, is a repeatable process that will generally make anybody successful. What did Warren Buffett say? It says, this is a way for someone ordinary to do something extraordinary. And this is what investments can do if you understand that long-term macro thesis. So we're just kind of rolling through. Look at Sol Rise here too. So again, this is since September, we've seen a nice 70% retracement already. This is a lot of big downtime for everything, ladies and gentlemen. Aave as well. Let's take a look, a longer frame on Aave. Yeah, here with Aave as well. Back here in November, actually, I wish I had more data with Aave, because Aave's got a long story here, but again, what we're witnessing, at least in my opinion, is a much longer term accumulation in terms of the DeFi sector as a whole. I would not be surprised if in a very short order this turns into what's essentially a giant bull flag. These are very valuable assets, whether Aave is running on Ethereum or Avalanche. The DeFi world is still gonna melt people's faces in the next 10 years. So don't forget that. Wi-Fi as well. Again, what we're looking for here is just general market sentiments. So here, wow, look at this range trade for a Wi-Fi too. Not enough data for Wi-Fi. It's on Binance, that's why. But look, let's go from the bottom of the TR here to the top. Yeah, a 600% range trade. This is insanity, right? So from the top to the bottom to the top to the bottom multiple times, you have a 600% changeover. This is not easy. Most people will not be able to hold on for a ride like this. I want to actually go over something where I made a big mistake, and that's with Polis. And I want to tell you why I made this mistake. I didn't make the mistake on purpose, and clearly no one's like, hey, I'm just going to make a big mistake for no reason. Guys, no, I made the mistake by accident. Well, what did I do wrong? First off, I'm a huge fan of venture capital. We've started to focus on finding things before a chart ever exists. There are actually a few people that invested in Star Atlas at the launch. One of our private members invested $200 and made 40 grand, I think, something crazy like this. So hats off to her. I was so proud of her. It was the most money she's ever made. She said she closed out the whole trade too, which at $200, why not, right? Makes a lot of sense. But when you're dealing with early venture capital, you're dealing with a lot of locked supply. That means there's early liquidity partners and early investors that have the majority of the supply that hasn't been released onto the market yet. So what I did wrong here was I'm like, oh, looks like a great triple bottom. I suspect we're going to go higher. We got right up to around $13, and then we've fallen down like 70% since then. So this was a clear mistake on my part to think that this was going to be a nice triple bottom. And why was that? So if I just told you why that was, so ask yourself why. Why was that to you? Well, because there's a lot of supply that still has not come onto the market. So this could have been just a few people who had invested early that finally got their supply from the Polis or the Atlas tokens. Now, how long does it take for the market to chew up the majority of the supply? Well, it can take a long time. And this is why Bitcoin's technical charts or Ethereum's technical charts were significantly more reliable. Every time you're dealing with new venture capital, the earlier you are closest to the release of a token, the more supply that can still come onto the market at any random time and surprise you. So you always want to keep a really close eye on that. And it's really important to understand these key differences in the way things function, which is that if an asset is new and we don't know where the majority of the supply of that asset is, at any given moment, any one particular player could drop the market. Iris! Close the door. Close the door. It was very loud for a second there, ladies and gentlemen. I apologize. Okay. So what else I want to look at today? Actually, we'll just go over a few thoughts and a few more questions with you guys. I think we're near the bottom. I think we're seeing bottoms in a bunch of assets. Again, be careful when you're dealing with early venture capital. The technical charts are not going to work. That was a big failure on mine for Polis's part. I should have thought about that one a little more deeply. But don't worry, it cost me a lot, probably more than more than any of you guys would like to know. But that's okay. I'm okay with those mistakes. That's why I said everyone's only lose a little is a little bit different to each everyone. So let's go with that. Tio, can you tell us your view on Cardano? I like Charles Hoskinson, but I'm not a fan of Cardano anymore. Have a little bit, not a huge fan. Just because I think Avalanche and Solana have such strong indicators, it'd be hard to say. Let's see. I'll take a few more guys' thoughts and questions. JC says, I remember you were bigger than BitBoy back in the day. Yeah, I have a hard time growing because I tell people off, and I'm not always about, oh my God, everything is going to go up 100x. We've gotten a few 100x's, but I don't really try to hype that up just because it's hard. It's too easy for especially for the average investor to fail that way. Again, Cardano might have a future, like it's worth an investment, but I would focus on a month-over-month strategy. That way, in 6 months from now, if you're trying to get $100,000 into the market, you're finding conviction based off that day-over-day repute that you're getting from the token, or sorry, from the protocol, what's being built, who's using it. We're going to try to do a bit more like activity research into like who's building, what's being built effectively. So we'll go over that more and more as we dive in. It's been quite a busy. I've been working, focusing on venture capital. I actually jumped on board as an advisor for a video game. I'm really excited about that one. If you're in the private group, you'll see it under the venture capital section. It's been a lot of fun. I'm learning so much. And one of the reasons why we're so bullish on the video game sector is because it feels like the on-ramp to financial services to the billion people that we're looking to onboard next. So I think it's hugely, hugely valuable. Let's see. Thoughts on Veritasium and Reggie Middleton. I still have my Veritasium. I think I've got around 30 of them or something. I bought them around $50 after the Cliff High podcast back in 2017. I still have it, haven't touched it. And this is an interesting version of the market identifying a thesis way fucking later. It's worth more now, but at the time, everyone was like, "Oh, Reggie's a scam. Very's a scam," and now he owns the DeFi patent. I'm not even totally sure how far-reaching that affects the markets per se, but it'll be interesting to see what it does. But the most important part is understanding that the validation in your thesis might take time, and it's very hard to hold on for that long if you do not have the conviction or the ability to hold to the downside. I think I bought them at 50. It was down at like $8 for quite a while. So yeah, it was in the negative for almost 3.5 years. Yeah. Is Digibyte a dead OG? We had a baby Bitcoin thesis. I still actually stand quite strongly by that thesis, which is in general, proof of work tokens will maintain some type of currency value. What the upside is probably very limited in comparison with other areas of the market. The DeFi sector has brought a lot to the table, and the NFT sector in video games, again, specifically play to earn games to me is where a lot of the fun is going to be at for the next few years, because I personally believe it is the on-ramp for that next billion people that we're really looking for. And that's I don't think that should be underestimated. Don Hodge says, Tio is the real. I appreciate that, Don. You're sweet. Andrew says, scale of 1 to 10, how are things going with the visitor? Iris and I are having a great time, except that I got sick the first day she landed, so I've been pretty much useless up until today, but we're back online. I've been working all day to try to catch up for the week so we could take our first weekend off, so things are going great over here. I'll go 10 out of 10. Matt B says, you don't have the advertising of the big guys, but you have better content. Well, I appreciate that, Matt. Thank you. That's all we're going for anyways. We're a quality over quantity type group here. The video, Mr. Hart Teaches says, the video you made on the beach was really good. I'll do more of the walk around ones. Yeah, it's funny. It's always funny to read people like Bob Rogers' comments. It's just like, I told you this, I told you that, I told you this. Yet he's on a YouTube channel leaving comments like, people are so fucked. So fucked. Oh my God. It's we won't even start down that road. Do you own some Hex and Stake It? No, I do not. Although I was never a really big fan of Richard Hart, but I did have some conversations. After I had a person-to-person conversation with him, I actually quite liked him. It was a little bit of a different story. That's not really what I was expecting, but very smart gentleman, and I had a great time chatting with him. So when you're making an investment, what interests you should be your guiding and leading indicator. That we've been wrong about a bunch of stuff, and that's normal. We've gotten a lot right as well too. So I think it's important to recognize that nobody gets everything right. So the easiest thing to do is to try to average that out through that conviction. That's why we kind of keep going over this idea. I just got rid of people like Bob Rogers. They're useless to have in the group commentary. I did everything. It's such stupid horseshit. When are you going to Mexico? In the beginning of March here. We'll be headed into Mexico. We'll be around that area. Thoughts on VeChain. So again, guys, here, if I didn't go over it already, it wasn't in my top 10 by any means. And if you're interested in like if you're interested in most of what we do, it's focused on philosophy more than which investment to make. The philosophy can drive longer than any investment, right? It's one of the interesting things, and why I suggest you read books like 100 Baggers or Dan Dow. Well, first off, both those books are written by people who have made hundreds of millions of dollars, which is also a great start. But understanding that the philosophy is actually transposable. It's like learning how to play music. I can play the oud, so I can play the guitar, which means I can play the clarinet and the drums, and I can sing. I can pretty much play any instrument because I understand the core concept and philosophy of music, regardless of whatever technical, derivative you're finding on, like, hey, is the cello fun? I don't know. Is the clarinet more fun than the cello? I don't know. Like, am I more bullish on a cello? When you're dealing with like something that has so many potentials, understanding the core philosophy of risk and risk management and long-term macro thesis thinking is more important than which asset and what the price looks like in that particular asset. Yeah. Pounce says, any book recommendations? Oh, yes. Yes, of course. If you actually go to my YouTube channel, let's take a look here. I said, if you haven't done that, you're on my YouTube channel, so I'm sure you've seen it. If you haven't, subscribe to the Arcane Bear. Let's see here. I'm going to go to my channel, and then let's look this up. If you go to the Arcane Bear channel and then playlists, yeah, let's go with this. So if you go to arcanebear.com, actually, wait, hold on. Yeah, go to arcanebear.com. Check us out there. You can find a lot of our stuff too, but let's, there you go. So here's our YouTube channel. Under playlists, we've actually gathered a bunch of our favorite audiobooks. So on this, under our favorite audiobooks, you're going to find a whole schwack of free books. Now, don't tell anyone, because I'm sure this is probably like a bootleg version, but here's a bootleg version of Christopher Mayer's 100 Baggers. This is an amazing book. And on the right-hand side, you're going to find some of my favorite investment audiobooks that are for free. Now, I've bought and read many of these. And I also collected these for you guys to easily find. So 100 Beggars is absolutely fantastic. I highly suggest this. Dan Dow, The Low Risk Method for High Value Investing. This is another absolutely phenomenal book, especially the first 2 chapters. You get the whole thesis really downloaded in the first 2 chapters. You've got The Intelligent Investor by Benjamin Graham, which is an age-old classic. The Better Prosciutes, this is getting a bit more into the philosophy of mathematics than investing, but very similar. Nassim Taleb's Fooled by Randomness is another great book about understanding market dynamics and the randomness that can be found within. There's Reminiscence of a Stock Operator, which is a great book. The Alchemy of Finance by George Soros is also really good. Trading for a Living is okay. And actually, there's a few more I thought that were down there, but there's a stack of 8 audiobooks that you can find on our playlist for free by going to the Arcane Bear YouTube channel and then going to our playlist section. If you haven't done so again yet, please subscribe to the channel. And remember, ladies and gentlemen, if you are new to the Bear family, and you're going through your investment thesis, one of the easiest ways, again, to kind of cure any of the difficulties and the sickness of the new investors by joining the private group. And if you're not happy, we'll just give you guys a refund. We actually get very few requests for those refunds, but being surrounded by a group of people who are focused and interested in the same thing is extremely important. A lot of the times you might find something super exciting and then try to go tell people about it and then fall flat on your face and realize that no one else really cares what you're talking about. So being surrounded by a group of people who are focused on the same things makes it a lot easier to deal with. Can you go on a philosophical rant? Probably. Those actually often come from just randomly inspired places. It's always funny. It's always funny to me. I'm always surprised by people, and they're first off, ladies and gentlemen, like if you want to get good at something, it's going to take time. I've been playing music my whole life, and it's not easy. Learning any skill set takes time. You should measure in 5 to 10 years for any good skill or talent that you want to acquire. One of the downsides to investing versus something like music is people can become good at it by totally getting random bullshit luck, and there's nothing wrong with that. Getting lucky and having things work out is, I guess, it can feel really positive, but in the long term, you usually don't see those people show up anymore. So with something like music, and that to get to this level of skill, that actually takes a lot of work and practice. It's a much more reliable version of like who's getting lucky versus who's actually doing the work. It's hard to tell who's actually gotten lucky. I do suggest reading the book, Fooled by Randomness, which is in that book list for this specific case alone. You'll meet people along your life that look like they've gotten successful, and they don't deserve to be there, and it's probably because they've gotten lucky. And that luck for success is actually significantly higher than most people measure in. Too often you see people that have gotten successful by accident, and then you rely on them for that accident, and then they can't repeat it. So there's that. Let's see. Love the book list. Happy to share. Actually, I'll reopen Bitcoin up here. Let's see where we're sitting at. Nice, 44,600. Yeah, we're starting to hit the top of that channel, though. Yeah. Boom, boom, boom. Open up all of our fun, colorful indicators there again. Yeah, we got a lot of resistance between 45 and 49,000. Okay, a few more thoughts and questions here, and we'll dive off for the day. Mark Parker says, "Hi, Tio from Granada, España. Thank you for your time. Great content, philosophy, and general top advice. I'd be interested to know your view on Theta and HOT." Theta did a multiple X growth. I wasn't in it. Interesting to think about how we deliver content in the future, especially knowing with what kind of problems is taking place today with people like Joe Rogan. But it's hard to say. That's why I think good investments take a few years to measure out, because some of them will go to zero. You're dealing with venture capital. The upside is basically infinite if you're right, and the downside is really limited by whatever you're investing. So this is such an important thesis to understand. Let's see. Awesome. Musical influences. Oh, Tool. Tool is like my musical influence. Oh, and I listen to a lot of Indian cultural music. I studied the tablas. I listen to a lot of Grecian music. I listen to a lot of Arabic music as well. A lot of Egyptian music. But that's just more personal flavor. Thanks a million for the great advice. Any thoughts on helium? No. Again, this is why we try to focus on the thesis more than particular assets, and why we highlight Bitcoin. Because I've been investing in Bitcoin for almost a decade now. Jesus. I wish I had known then what I know now, which is just only fucking buy every month, effectively. Yeah, we thought we were hot shit when we were taking profits, but it's actually boded much worse. It's a different story. On another video. Actually, it wasn't Michael Saylor who said if you plan to hold Bitcoin for 10 years, you should not hold it for 10 minutes. He's actually reiterated, I believe that's a Warren Buffett quote. He just said Bitcoin instead of an asset, and ripping off other people as much as he likes to do that and pretend that he and Bitcoin are talking intelligently. Well, although mind you, Michael Saylor is a very intelligent person. I'm not saying he's not, but that's not his quote. It's a Warren Buffett quote. So why is helium so high? Is it just the low molecular weight? That's funny. Want to talk about the DOJ seizing 120,000 Bitcoin? Well, that was just a crazy story in general. I can't believe the people that were able to get away with that. I was kind of flabbergasted after reading some of those stories. And they just left those seed phrases in a cloud with 2,000 different accounts. That was spectacular. What a spectacular. And they were living in Manhattan. I tell you what, if I had stolen some $1 billion worth of shit, I would have got the fuck away from the United States real goddamn fast. Like, what the fuck were they thinking? Maybe they just didn't have good parents, but my dad told me, like, if you're going to do illegal things, try to not do too many illegal things at once, or to make sure the illegal thing you're doing in the country you're doing it in is pretty easy to get away with. Something, like, be a little smarter if you're going to do stupid illegal shit. Okay. So I guess that would be my only sentiment about that. There is another part, though, about what does the DOJ do with that 120,000 Bitcoin? Because if they start to dump those on the market, that would be something that could send us quite down to that 18 to 20 grand area pretty easily. But again, I doubt we would last that long. We would be down there for quite a short period of time. See, this is the thing that VSPR doesn't get. He's like, oh, it's much easier to hold Bitcoin long term if you invested a decade ago. Well, that's because the decade's done, you putz. This is the quote. It goes, when's the best time to plant a tree? 10 years ago. You know the next best time? Right now. People are so uneducated when it comes to strategy. And I think this quote around tree planting is one that really, really hits it home, is when's the best time to plant the tree? Yeah, 10 years ago, if you were smart enough to do it. You know when the next best time is? Now. You know, nothing's changed. It's the same strategy. So although VSPR, you're correct, I've been here for a while, doing it correctly, and what I'm doing now by saving you the time of all the mistakes you're probably going to make is actually way more valuable than you think, because you're already making a bunch of mistakes because you sound extraordinarily emotional. Oh, Axel Fuzz say he's quoting Warren Buffett all the time. Yeah, makes sense. Tool, yes, yeah, I'm a huge fan. He's not ripping people off. Yeah, I mean, quoting people without quoting them, I think is kind of a rip-off. It'd be like me playing someone else's song and be like, yeah, I wrote that shit. That's exactly what a rip-off is. 2020 is full of so much stupid. Who steals billions of dollars and leaves the evidence in the cloud for everyone to find and then stays in America? I know, so crazy, right? It's ridiculous. You sound like an angry person. Angry? No, I'm confused by stupidity, Axel Fuzz. Not angry at all. I think, what? You're that dumb? I mean, I've been astounded by people's ignorance and stupidity for years now. I guess it shouldn't surprise me. Yeah, exactly. Do I look angry smiling here right now? People are funny. Let's see. Mostly invested in Awesome. Well, this was a lot of fun, ladies and gentlemen. Thanks for chatting. I was glad we got to catch up today. As awkward as it is to be in the middle of a market and saying I think we're actually putting in somewhat of a bottom, I believe that's what we're seeing. So it's super important. VSPR says, I think he takes drugs. Yeah, I take mushrooms all the time. I feel sorry for those of you that don't. I actually grow ayahuasca here too. I got a bunch of other things I do better in my life than you do as well, VSPR, by the way. If you'd like some better advice for how to live a life, I'm sure you can figure it out. Spend time with nature. Yes, the pool is built. It's beautiful. If you want, you can go. Actually, here, you guys want to see the pool? Okay, we'll show you the pool. We just finished building my pool here. Let's see. I'm actually quite proud of this, not because I built it, but because of how much I love the jungle and the pool together. Okay, there you go. That's it, right? Bam, there it is. That's what she looks like. Although now with beautiful woman included and in the pool here. Yes, so I did finish it. I feel stoked about it. Let's see. Okay, just a few more thoughts. I see you guys are knocking down questions. Yeah, we have a private Discord, but actually, yeah. Sorry, we'll leave it at that. We'll leave it at that. You guys are awesome. See, these live streams are a little bit harder to manage because it's just kind of all over the board. You know, see what's funny. People like VSPers are gotta go. Time for his mushrooms. This is what jealousy sounds like. This is what jealousy of people sounds like on YouTube. I wish I had an editor for while I was live for like PewDiePie style stuff because this would be so much more entertaining. Awesome. Ladies and gentlemen, thank you all for joining us today with the Tea with the Arcane Bear. You guys are fantastic. It's been a fun episode. We stayed on way longer than I expected today. A whole hour. I haven't done that in forever. That's pretty spectacular. Thank you all. I appreciate your guys' support. And we'll see you on the next episode. Actually, we've got a live podcast tonight. We're chatting with Infinity Force. You know, we've made 2 investments into guilds already, both Avocado Guild and oh Jesus, what's wrong with my Rainmaker Games? And there's a reason for that. We feel that the guild space is another route to the financial services on ramp, and whoever gets that one right, you're not dealing with just 10,000 video game plays or a million video gamers. You're dealing with a million video gamers who have DeFi and bank accounts and credit cards attached to their accounts, and we're getting a lot of really interesting conversations going in that guild space. So it's a lot of fun. Anyways, Tea with the Arcane Bear. We're gonna see you guys again on the next episode. And VSPR, I hope your life turns out better. It seems like you're having a really tough time there, dude. You probably need as much love as you can get there. I don't know who else wants to, some of you people, you just sound, I just feel sorry for you. You're like, you think you're going to be able to make fun of me for eating psychedelic mushrooms. You're stupid. You're a stupid cunt. Anyways, we're going with that. Yeah, bam.